What's good, people? Welcome to Flex Finance. My name is Daniel. I'm here to help you guys make money and save money. Today we're discussing learning when to sell and tips on what to do after you sell. So first off, it is impossible to time the market. No one can time the market. It's a skill that gets better over time, but you still, no matter how long you've been trading, you still will get it wrong sometimes. Nobody's perfect. It's just impossible. Now, when I say learning when to sell, that includes selling at losses or selling at a profit. The issue a lot of people have with selling at losses is they think that the stock will rebound eventually, and you don't want to lose money. But sometimes you have to learn that just because you're selling at a loss on that particular stock doesn't mean that you will lose money in the long run. And I'll explain that later. Also, selling at a profit is a problem that a lot of people have because sometimes a stock exceeds your expectations price-wise. And when you see a stock, let's say you bought it at $6 and it gets to $8, anything under $8, usually people have a really hard time selling at because they think, oh, I could have had it at $8. $8 is my expectation now. Anything under that is just a loss, which it isn't. Profit is profit, and I will go into that deeper too. So first, I'm going to go over two experiences I've had. One where I sold at a loss and one where I made a profit. And after that, I will go over tips on what to do after you sell for both situations. So I made a profit on a company called SAYRO or IRO. It was an EV company, or is an EV company, and I bought it at $2.97. And my price target to sell at was $7, and it reached $8. And when it reached $8, I didn't sell because I expected it to keep rising because I was just following the, if the stock is rising, it doesn't make sense to sell before it has stopped that rise. So it was $8 and then it started dropping, and eventually I saw that the stock doesn't seem to want to keep going. So what I did was I sold at $7.30. And although initially I was kind of sad that I could have sold at $8, I could have sold at $7.50, at $7.40. $7.30 was still 30 cents over my initial price target. So I made more money than I had even targeted to, which was great. And you just have to remember in those cases that yes, you could have made more money, but you may have surpassed your price target. I mean, any type of profit you make, no matter how big or small, is a good thing. You guys need to remember, profit is profit. Don't get greedy, because if I waited and didn't sell at $7.30 because I was like, okay, it's gonna get back up to $8 and it's gonna surpass $8. Right now, the stock is around $5, so I would have missed out on so much money just if I waited. So you guys have to learn. Okay, if the stock is up high and it's starting to fall and doesn't seem to be going back up, sell. If you guys want to stay in that stock, that's fine. I mean, there's different ways to go about it. One is you can sell at a high price. Like for instance, if you sell at $7.30 and it drops to $5, you can buy back in at $5, alright? And then you can be on that stock if it goes back up. That's one thing you can do. Another thing is you can just hold it and see if it does rise back up to $8 or surpass that. I would only do that if you guys really believe in the stock and are comfortable waiting. But I would say either sell and buy back in, or just sell and go into something else. Another important thing I forgot to mention about SZOM though is that what happened was I sold and the price was going down and I was gonna buy back in, but then what happened was an offering was made, and that's when the price really just plunged. I believe it was still around $7 or $6 when I was gonna buy in, and it dropped to $5. So you guys have to make sure that you are collecting profits, because an offering could be made at any moment and that could just destroy your profits. It can destroy the value of your stocks. So it's important to know if I'm making profit and I'm happy with that profit, which it's different to everybody, but to me, as long as you're making some money, it's a good idea to sell. If it has peaked, or if you believe it has peaked, which I was lucky with SAYRO. I believed it had peaked at that time, and I did sell, and I sold at $7.30 instead of losing it at $5 when the offering was made. Now, the story of when I made a loss was a company called SZOM Pharmaceuticals, and I bought into the hype in that company. A lot of people were investing into it, and they were suggesting it. I bought in, I believe, 23 cents, and the price actually, I made a bit of money on that stock. Like, it gained value, but what happened was, once again, an offering was made, and that completely destroyed the value of the stocks. It was destroyed. There was no comeback from that. I mean, I guess I could have held. I would still be holding right now and waiting for it to come back up, but what I did was I waited a week or two just to see where the price was going, just in case it did go back up. I saw that it wasn't doing much, so what I did was I sold those shares at a loss, and I reinvested that money into different stocks. And since then, I have actually made back that money. So that's what you guys need to take from this story, is that just because you may be making a loss doesn't mean that you can't make up for that loss. Actually, if I would have waited even longer, I could have lost out more money. So say you have a stock value at $5 and it falls to $4, right? Okay, you've lost $1 per stock. But if you lose that $1 and you reinvest that money into something else, you can make back that money. But if you wait and that stock falls to $3, now you sold $2. Now you've lost even more money than you had to, just because you couldn't bring yourself to sell. And that happens, that's fine. But you guys really need to understand that selling at loss is not the end of the world. It can actually be a good thing, because now you're freeing up money to invest into other stocks, which is what I would suggest you do. If sometimes a stock may fall in value, for example, IDEX, that stock has been up and down for me a lot, but I'm still in it, and right now today, it went back up and now I'm at a profit again. So sometimes, if you guys believe in a company and it is at a loss right now, just hold. But if you guys aren't that into the company or have lost faith into it, just sell at a loss and reinvest that money. So now I'm going to go over tips in terms of helping you guys sell, or getting you more comfortable with selling, and what to do after you sell. So my first tip is have a target sell price. Okay, so a lot of people buy stocks and they don't know exactly when is a good time to sell, and that's bad, because a stock may peak and a lot of people understand, okay, that was my sell price, I'm selling, right? But you don't know that it's peaked. So when the stock starts to fall again, because it will eventually, you haven't sold, you haven't made any money, and you might end up losing money. So having a sell price in mind is a great idea. It's essential, because then if a stock goes up to the price that you had set, then you can sell knowing that, okay, it reached what I wanted. It lived up to my expectation, and I can live with that profit. Now, also, what I was saying earlier was, if you do have a target sell price, that helps, because, for example, when I woke up, right, and SAYRO had skyrocketed beyond my $7 target price. So what I do is, I wait for the stock to peak, and I wait for it to drop just a bit. I want to see if it dips, because sometimes it dips and it keeps going, right? It never really just keeps going. It will dip, and either it'll keep dipping or it'll go back up. So what I did was I waited, I saw it dip, and I waited for it to regain momentum, and it just didn't. So then that's when I sold. So what I would do is, if you guys see a stock peak, If you watch it closely and it peaks and it starts to dip, just wait. Don't panic, because sometimes if you panic sell and it regains momentum, then you've lost that money. So just wait. If it regains momentum, good. If it doesn't, just sell. So that's a good way to know when to sell. So my second tip is, if you guys have bought a stock and it hasn't lived up to your expectations and it just left there holding the bag, waiting for it to jump, and it just hasn't done anything, there are two things I would say to do then. The first thing would do is evaluate whether you guys believe in that business. If you guys do believe in that business, then I would say hold, because good businesses always find a way to rebound, especially if they're a big business like a Starbucks or whatever. Those businesses will always rebound, so hold on to those. Now, if it isn't a business that you believe in, I would say sell it, right? Sell it and invest into something else that you guys do believe in, or another opportunity that seems to be able to create more profit than just waiting and holding the bag. So my third tip is, if you guys are deciding whether to sell a stock or not, or if it's a good time to sell a stock, what I would do is do some research. Go into their website, look at news articles on that business. If it's hard to find that stuff, try and look at the financial aspects of the company. They usually have earnings reports. If not, check Twitter, see what people are saying about them. If that company has a specific account, check that on Facebook or wherever they have it. Check those accounts, because it gives you a better idea of how the business is operating and what's going on. Also, look at the charts. Your charts are your best friend. You can see how fast the stock is rising. You know, has it slowed down? Has the momentum stopped? Is it dipping a lot? Is it volatile? All these are indicators that you can use to see or to predict whether a stock will continue to rise, will it fall, is it going to rebound, is it going to break through. You guys have to use those indicators to make your choices. A technique that may be good is use your target sell price, and make sure, if you guys are using an app like Robinhood, you can do a stop order, which means if a stock falls below that price, it will set it automatically, which is a useful feature, because sometimes, like I say with offerings, a stock will plunge very, very quickly. And there's a bunch of things that can happen outside of offerings that could cause that, but an offering is the most, I think everyone may have been in the stock when an offering is made, and it's just a terrible thing. Everyone kind of knows about it. So use stop orders, so that no matter what, if a stock falls below your target price, you guys will still have that sold at the target price, so you can still make money. Finally, what I want to leave you guys with is, selling a stock doesn't have to be the end. If you guys like that business, if you guys believe in its long term and the price was just irresistible, you just had to sell at that price, or if it dipped a lot and you just had to free up money and invest in something else and come back to it later, do so. You know, if you guys sell high, you can buy back the dips, which means when it falls in value, you can buy it at a lower price, right? And you can actually buy more shares that way of that same company. So just because you sell a company or sell a stock doesn't mean that your venture with that business has to end. Some people live by this, you know, buying low, selling high, and buying back into dips. But it's not for everyone. It can be risky, but it works for some people. So if you guys enjoyed this video, leave a like, subscribe, comment. We'll see you soon. Hopefully we can make some money together.